Hello and welcome back to the Trinity Student Managed Fund podcast with me, Emanuele Roncalli di Montorio-Veronese, where I speak with leaders in the world of business, finance and technology to give our students a better insight into the careers we may wish to pursue. Today's episode is sponsored by Setanta Asset Management, a Dublin-based boutique investment manager specialising in equity and multi-asset strategies with a fundamental value approach since 1998. With a proven track record of strong performance and 13.2 billion euros in active assets under management, Setanta serves a diverse client base, including institutional insurance, pension funds, charities and family offices across Ireland, Germany, Canada and the United States, applying a long-term investment philosophy that clients value. Today, I sit down and speak with Mr. John Stephen Daly. John was a partner at Goldman Sachs where he worked for 32 years before retiring in 2021. Immediately before his retirement, John served as chairman of global equity capital markets and previously held leadership roles in Goldman's financing group in both Hong Kong and New York, and also served on Goldman's Firmwide commitments committee. John started at Goldman Sachs after earning an MBA at Wharton Business School. Prior to business school, John earned degrees in mechanical engineering and mathematics from Trinity College Dublin and worked as an engineer at General Electric. Post-retirement, John co-founded 25 Madison, an incubation and venture investing firm focused on the healthcare, artificial intelligence, and industrial supply chain sectors. He is also a board member of the National Treasury Management Agency in Dublin and chairman of the Investment Committee of the Irish Sovereign Wealth Fund. He is a member of the Trinity College Dublin's Provost Council and serves as a board member for the Michael J. Fox Foundation for Parkinson's Research, the Irish Arts Centre in New York City, TMRW Sports, a parent of TGL, the Indoor Golf League. John is also a senior advisor to Veriton, a research, investing and strategy firm focused on the energy sector. I really hope you enjoy this conversation with John Daly. Welcome back to the Trinity SMF podcast. Today, I'm delighted to be joined by a proud Trinity alumnus, Mr. John Stephen Daly. So welcome to the Trinity SMF podcast.
Thank you. Good to be here.
So our listeners obviously would have heard your introduction about your successful career at Goldman Sachs, and of course your ongoing success with 25 Madison. But could we start with the beginning of your journey, John? What was it like growing up in Clontarf? And of course, why did you decide to study engineering at Trinity?
Well, thanks, Emanuele, and as mentioned, I'm delighted to be here. As you said, I grew up in Clontarf. I'm number 3 of 4 boys. My mom, God bless her, was an amazing woman who just passed away last year at the ripe old age of 95, was from Chapel Izzard. My dad was from Ballydehob in West Cork. He left there when he was 16 to start work in the civil service, and he worked in the post office until he retired in 1983. I always thought it was an interesting mirror of time that my dad retired almost to the day that I graduated from Trinity. So he was leaving the workforce as I was entering it. Anyway, I went to Belgrove Primary School and secondary school at St. Paul's Raheny. Trinity Engineering was my number 1 choice, primarily for 1 or 2 reasons. Number 1, my brother studied medicine at Trinity, was going to Trinity when I was applying and doing the leaving. Number 2, it was close, and number 3, I really enjoyed maths and physics. So it was clear that engineering was going to be my focus.
And could you give some insight? What was Trinity life like for you? What were you part? Obviously, the Trinity SMF wasn't around back then, but what were you doing?
Yes, and I'm sure we were worse off because it wasn't around back then. But look, I, like many Dublin students, lived at home while attending Trinity. So I biked into Trinity from Clontarf every day and parked outside the museum building. Did it every day for 4 years, braving all the weather that Dublin and Ireland can throw at me and the belching bus fumes that we had back then. I'm not sure what the engineering schedule is now, but back then we had class or labs every day from 9 to 5, Monday to Friday. And I played on the Trinity basketball team and the tennis team. So depending on the term, I'd have practice or gym sessions most nights. So it was extremely busy, but I very much enjoyed my time at Trinity. A quick little aside, I was captain of the basketball team when we won the InterVarsities in 1983. And 2 years ago, I attended a night's dinner with three of my teammates from that year, Kevin Broley, Paul Summers, and Pierce Rutledge. And at that dinner, we met some of the 2023 men's basketball team who had also just won the InterVarsity. So it was very enjoyable to swap stories about our respective wins, separated by exactly 40 years. It was also pretty interesting to see the difference in average height of the 2023 team versus our team. And maybe enough said about that, the better.
So there was no game, there was no.
Oh, we would have taken them, but no, of course, it would have been very interesting to see that game. But I don't think we would have. We didn't have enough drink to suggest a game.
So then I suppose final year, as some of our listeners might be in final year now, what were your thoughts at the time in terms of careers and kind of life aspirations?
Yeah, look, the final year, 1983 was a terrible year to graduate college. The economy was in a big recession. Very few of my classmates, either in engineering or elsewhere at Trinity, were able to get jobs. I went through the process, the recruiting process with all the companies that came to campus like everyone else. But I think if I remember correctly, those companies hired just a handful of my classmates. So we were all looking abroad to see where we could get jobs abroad. So in May of that year, towards the end of my final year, I decided with no jobs around, I'd apply and was accepted into do a master's in engineering at Trinity starting that September. So I said, look, I'll spend the summer with my brother in the US, and then go back and do a master's and just play out the option for see what would happen to the economy after a year in the master's. Um, an interesting story as to how I ended up working as an engineer rather than doing that master's. I was scheduled to fly on a Tuesday in early June to the US to, as I said, to hang with my brother for the summer. And on the Friday before that Tuesday, a letter arrived in the post office or in the mail from the careers office of Trinity. Remember, this is before internet days, with a one-page flyer that was sent to all of the engineering students at the time, that a company called Specialty Materials Ireland was looking for a manufacturing engineer and to send their CV to the address in Clonshaugh Industrial Estates in Coolock. I saw from the flyer that they did something that was something akin to my final year thesis in mechanical engineering. So I changed into a suit that Friday and drove up to Coolock with my CV and my thesis under my arm. And I walked up to the security guard at the gate outside the plant, and I showed him the flyer, and I said, "I see this flyer. Here's my. Can I talk to the person at the bottom of this flyer because I'm flying to America next Tuesday?" And he asked me, "Did I have an appointment?" And I said, "No, I don't have an appointment." So he told me to piss off. So I said, "Well, listen, I'm flying, as I said, on Tuesday to the US. Would you mind handing my CV and my final year thesis to Colin, was the name of the hiring manager, and he can call me and I'll come back up on Monday if he wants to." So Colin called me and I went back up there on Monday, and then I flew to America on Tuesday, and then a month later he called to offer me the job. So that's why I didn't do the master's. So I guess if we're looking for morals of the story for current senior people at Trinity, I would say number one, the serendipity of life that envelope arrived that day instead of a few days later. If that had been delayed in the mail, my life could have gone a different way. And also maybe a little bit of cheekiness on my part that I just drove up. And then also when he told me to go away, that I actually pushed a bit and gave him the CV, and it worked out. It worked out great. So I would say that for people who are graduating this year, it's an incredibly different time. But there's no harm in pushing for something that you might want.
And having that initiative. Wow, that is an interesting story. And how did investment banking or finance generally come into the picture? I don't know if there was the free FT subscription at the time, but which we have now. But
Yeah,
you
there
know,
was nothing. There was nothing free back then. I guarantee you. So why investment banking? Well, the after spending 4 years at GE, and I worked at GE both in Dublin and in Columbus, Ohio, spending probably a year and a half of that 4 years in Columbus, Ohio. After spending 4 years of being an engineer, I decided I wanted to learn more about finance, and I also enjoyed the US. So I applied to MBA schools in the US, and I was accepted into Wharton. And my thinking at the time was that with an engineering degree coupled with an MBA, I'd have both finance and I'd have engineering, and I could maybe manage a manufacturing plant or a company. So that was my thought process in going to the MBA. It was really just to repot myself, give myself an incremental skill, and then see what happened after 2 years. What drew me to investment banking was, it's a 2 year program, right? You need to get a summer job between first and second year. I needed a summer job. I had no money and I wanted to work. So I sent out as many CVs as there possibly was that I could send to everybody under the sun, consulting firms, investment banks, General Motors, Ford, consumer companies, Colgate, whatever it was that it was accepting CVs, I sent them out. And I think that in the interview process, the banks and the consultants seemed to like my background better than more corporates. So I got to interview with both the banks and the consultants. Interesting story about Goldman. I was walking out of a interview with another bank, and I, for whatever reason, hadn't applied to Goldman. And when I was walking out of one interview into the holding area, somebody came out and said, "Hey, there's an opening in the Goldman interview list. Does anyone want it?" And I said, "Sure, I'll take it." So I just happened to walk into a Goldman interview. Once again, the serendipity of life. I was lucky enough to walk in. But so I wouldn't say finance was a focus. It was more I fell into it. But certainly my background at Wharton made finance an easy direction to go and an obvious direction to go.
That's incredible. And so what was so obviously Goldman Sachs wasn't as what year would this have been? This would have been sort of early 90s or
No, it was
late 80s?
88. Summer of 88 was when I
88.
worked when I first worked at Goldman. Yeah.
And so what were those early years like at Goldman Sachs? And I suppose as you implied, you would have been probably the only engineering student or one of very, very few.
Yeah, look, I was very green. I remember walking, I remember walking into the first day, and back then there wasn't really, a formal summer program. It was kind of like the area that you went into looked after you. And I remember the first job that I was asked to do was to put together a working group list by a vice president. And I said, "Great, I'm on it." And then I walked out and I said, "What's a working group list to somebody?" So like I was very, very green in the entire investment banking arena. But look, the thing about the academic background that I had is that you learn how to think, and you learn how logic works, and you learn how to tackle a problem. So I think my background, both engineering and the work that I had done, it made me confident. I wasn't intimidated by numbers or models. I wasn't intimidated by industries. There was little to be intimidated about. There was a lot to be intimidated about by the human beings I was surrounded by, because they were all very impressive. But the back then, people pretend or like to think there was no computers. There was plenty of computers back then. We did actually have stuff that helped us work and helped us be efficient. But the early junior days at Goldman Sachs, when you wanted to get something from, for example, a corporate annual report or a 10K report, you actually had to go down to the library and take out a microfiche and photocopy the microfiche for the 10Q from a couple of quarters ago. And I'm sure nobody on this call even knows what a microfiche is, but effectively it's a photograph of a photocopy. Anyway, so there was some ancient stuff back then. But I would say that the quality of work we did was as high quality back then as it is today. The quality of work and thought is exactly the same.
It's incredible. So there was no Edgar, there was no online. You had to probably physically go down to the
Yeah.
the
Yeah. In the early days, you had to physically go to the library to get the reports.
I suppose just still going a bit deeper on the early years. I suppose what are some of the key lessons? And you mentioned that how your degree helped you approach problems, with an engineering background. What are some other lessons which maybe.
Um, look, I think that the lessons that I would have as a junior person are somewhat different to the lessons that I would recommend as a senior person. But as a junior person back then, to me, um, there's the first one is really obvious, is work really, really hard. And I don't think anyone doesn't work hard, but I just think that there are plenty of people who were more intelligent than I was, that did less, were less successful because they just didn't work as hard. And I would say work really, really hard, sweat the details. As a junior person, you have to double and triple check your work. You should anticipate what the vice president is going to want and get ahead of it. Surprise the vice president with your proactivity, having thought about something that they were likely going to think about. So think like a VP, and maybe even do the incremental analysis that they would be asking, that they are likely to ask you to do. Ask smart questions, be curious. Probably the biggest thing that I look for in a recruit when I interview somebody is, are they intellectually curious? And you can see that in terms of what they've done, how they talk around issues. But I think that being curious is really, really important. Read the research around the companies and around the industry. Know why clients are trading like they're trading. Why are they trading at high PEs, low PEs? What drives the industry? So as a junior person, you're kind of drinking from a fire hose in terms of what you have to learn and what you have to do. And obviously the buck stops with you in terms of putting presentations together. So you got to make sure there are no mistakes in the presentation. But the great junior people are the people who think beyond just the pages that they have to put together.
And I'm just thinking because obviously some people now are deciding which part of the bank to go into, but I know whether it's sales and trading, investment bank, equity research, so forth. I know at the time obviously banks have changed so much, but what would your advice be there in terms of kind of, I know it was as you said, a lot different when you started your career, but what would your advice be in terms of deciding on a specific area of a bank or a firm, even even a yeah.
Yeah, look, I was hard into banking, so I didn't really have the choice of debating between sales and trading and banking. Once in banking, I really enjoyed the immersion that I got in our client's business. We needed to know the industry, the business of the client deeply. You had to do a deep dive in the industry. As a banker, you needed to know the products as well. So you had to be expert in whether it's an M&A or an IPO or a debt or derivative or many other products, foreign exchange. I mean, there's a lot of stuff you had to learn. And then there was multiple geographies in terms of, companies that operated beyond wherever geography you were working in. So it was never the same day to me in banking. So I just loved that aspect of it. Now, I also, and I'm sure we're going to get onto ECM at some point, I also happen to love the markets. So I bet you if I had been dropped into sales and trading, I probably would have loved that too. So, you know, one of the things I think is as junior people starting their career, they feel a little bit locked in when they make a decision. Therefore, the decision becomes really big. And I would say, and as we go through my career, you'll see, there's lots of different turns you can take in a career, and none of them, rarely, if ever, have I seen anything to be the death knell of a career. There's lots of different ways that you can tack within a career, and as I say, I did myself. I went from banking into equity capital markets. And it was I had found my calling in terms of where I ended up, and I think that someone who starts in sales and trading and looks over the corner and says I really like banking, I bet you they can find a way to transfer. In fact, I know they can. I just helped somebody think through it, who was a junior person at JP Morgan, and he asked me for my advice, and we talked through it, and he's now working in bank.
Could I get a bit of insight into that conversation? What is the advice you're giving there? And
It's not dissimilar. It's not dissimilar to the advice. He was a naturally outgoing human being, and I said, use your natural outgoing ability to get to know the people in the area you want to work with, and just start working to be great at what you currently do. So the internal reviews on you will be excellent. So if the person running the area you want to go into calls your boss, there's nothing but glowing reports. And just be incredibly transparent on where you want to go. The vast majority of corporates desperately want to hang on to great people. So if you're a good person and people know you to be a good person, and you put your hand up and say, look, I love what I'm doing. I love you, Mr. Boss, Mr. Miss Boss, but I really want to move over to this area. I guarantee you that in 99% of the cases, you'll be able to make it happen.
and could we go deeper on your decision to go into?
Yeah, so this the moving from banking to ECM,
ECM.
so I moved to equity capital markets after 4 years in general investment banking. My manager at the time in investment banking felt I'd be a really good fit in equity capital markets, and they needed somebody to transfer in and out. Equity capital markets, for those people on the call who don't know it, it manages all facets of equity issuance into the market. So positioning, valuation, marketing, pricing, aftermarket of IPOs, equity follow-on offerings, convertible offerings, derivative offerings. So anything that's offered into the marketplace. And I would say I didn't put my hand up to say I want to move to equity capital markets. They needed help. It was a really busy time. They needed help in a specific industry. I was working in the energy and in the oil and gas, natural resources group after being a journalist for a couple of years, and there was a lot of natural resources equity issuance going on. And they said, would you mind having John move over for a 1 year interim step, and he can move back? And my boss asked me to do it, and I didn't think it was a good idea because I was really enjoying what I was doing, and I had just got a set of clients that I could call on independently. And I resisted it. And eventually, after him asking me a few times and more senior people asking me, I realized that no was the wrong answer and yes was the right answer. And then having moved, so therefore, it wasn't apparent to me that this would be a great move. But having moved within a month of being there, I realized that the equity capital markets job brings together a lot of what I really liked, which is there's plenty of banking in it. There's plenty of deep dives in the company and in an industry, how they trade, etc. But there's also lots of markets and there's lots of judgments and there's a big velocity of transactions. You don't work with a client for a year and nothing happens. You tend to really be brought in when something's happening. So it gets to be very dynamic. And within a month of working in equity capital markets, I said, I want to stay here for the rest of my career. So then I spent the next 11 months convincing my new boss that he should keep me and telling my own boss I would stay, and everyone was okay with that.
Wow. So I suppose, would I be correct in saying one of the lessons from that should even be then, your boss, you need to have faith in your boss. So you need to have faith in certain senior people that can
Yeah.
guide you in the right decision better than you, because you said you were resisting it at the time. But then, of course, when you accepted it, you fell in love with it. So
yeah, I think there's two things to take away from that. Number one is don't always trust your own judgment for things you don't know about, and listen and ask questions. And my boss at the time saw something in me that he thought that I would be very well suited to ECM, and he was right.
And did you have mentors early on?
Did I have mentors? I find the word mentor to be a funny word because, I didn't have mentors in the sense of, somebody sitting down with me and saying, hey, John, let's plan out your career. You need to do the following three things with this two people over here. And maybe that's too narrow a definition of mentors, but I would say I don't look back and say I had lots of mentors in that sense. But what I did have over the course of my career is I really did have people who believed in me. So whether it was Phil Murphy, who's now the governor of New Jersey, who saw something in this raw kid from Clontarf and recruited me from Wharton from my initial job at Goldman Sachs in 1988. In those interviews, or the guy I just talked about, John Powers, I actually played golf with him 2 weeks ago, who pushed me to move into ECM from banking. Or the guys who ran ECM are the partners who asked me to move from New York to Hong Kong to run the business in Hong Kong. Or David Solomon who asked me to run a couple of groups in financing group at the Americas group. There were plenty of people who I guess who believed in me, and I would say that at a lot of those stages, I was, I was tentative about the new responsibilities. And as you've heard, I did resist a change once or twice, but I guess they saw something and they knew in hindsight that I would embrace the opportunity, which I did. But, I would say that the message here is, even if the opportunities are not apparent to you at the time, new situations can really help. The act of changing and learning something new will help you grow and become a more successful person. After I moved to Hong Kong, I was only there for 3 years, but after I moved to Hong Kong and came back, plenty of people would come to me within Goldman and ask me, I've been offered this job in Europe or Hong Kong or somewhere else. What do you think? And I would give the same advice: run as fast as you can towards that opportunity, because inertia is a very strong force, particularly in a career when somebody's comfortable. And it's so easy to come up with reasons why to stay in my current job. I've got this new client list, or I really brought in lots of deals. I really know what I'm doing. I got family here. There's lots of reasons to stay stuck. And I would say, and this probably is a little bit because I grew up in Ireland and I moved to America, and the world doesn't scare me. I think it's a really interesting place. And I think when people tend to be in one place at one time, they get stuck. And I always gave the same advice: run at different opportunities, particularly different global opportunities.
I want to come onto that in a moment. And obviously, you went on to have such high success. I mean, you mentioned David Solomon there. Obviously, now many of our listeners will know the CEO of Goldman Sachs. But I'd love to just go again and double click on the early years and upon self-reflection. What do you think? Clearly, a lot of people saw talent. You had, the hustle, the, strong work ethic, all the credit to the MBA from Wharton and so forth. But were there any other aspects you thought which differentiated you to maybe your peers at the time in a similar level, and which you thought helped you sort of rise up and so forth?
I would say I don't mean this to sound anything other than a fact. I didn't really have a big ego. I just was pretty aware of what I didn't know, and maybe that was because I hadn't come out of college and gone into banking. So, I was very aware that there was a lot I didn't know, and I think that kept me focused on making sure that I knew as much as I could and working as hard as I could to learn as much as I could. I think that if I was to think, one of the things that I think is a skill that is a really, really important skill for everybody to learn, not just for career, but for life, is listening skills. And I think it's actually something that a lot of people are not that good at. And if somebody's listening to you or not. And I mean really listening. If someone's telling you a story about something great that they did, and the first thing out of your mouth is, "Oh, that reminds me of the time I did something great," you're not listening. You're waiting for them to stop speaking so that you can tell them about something that you did. And, to really listen, to ask the question, to say, "Tell me more about that," as you just did, double click on that. That listening skill is something that I think, you asked me about me, but I'm sort of imparting it back to you and to anyone else listening, is really, really important to listen to what's being said, what's not being said. And it really helped in client situations. I often remember going to client meetings where, there'd be 2 or 3 or 4 people on the team. They'd all have their specialty. One person would have a specialty to talk about the market for this industry and the dynamics around whatever was happening in the stocks in that industry. And they would come in and they would know that they had 15 things that they want to impart in the meeting. And you would realize before we got to their section that the client had said something, and it could have been just an aside, that made it really clear that the client was focused on something else, not their things that they were going to talk about. And the amount of times that I would see people misread that or not hear it or not bring it to bear in their comments was way more often than you'd like to see. So you have to really be aware of what the client is saying, what the client is thinking, and then react to what the client is thinking and doing. The best relationship managers I saw in my career at Goldman were the ones who were the best listeners and the ones who could really understand what was going on in the client and really tack within the meeting and during the meeting to make sure they hit the right points.
I'd love to shift our focus now. It's quite interesting as well because the FT, they just released an article today about John Waldron, implying he's going to be the next CEO of Goldman Sachs. And in a memo to staff, John Waldron, obviously the president CEO, and Richard Node, they said a statement, and it was, John has played a significant role in growing and developing our ECM franchise around the world. So my question is, what was your approach to that, and how did you do it?
How did I expand the franchise around the world?
Yes.
Well, my career spanned the 90s, and I was in New York in the 90s. And in the 90s, there was a lot of privatizations of companies all over the world. And a lot of them wanted to list in the US. The 90s was also where there was an incredible number of IPOs. I think, I won't be exactly right in these numbers, but I'll be directionally right. I think there was about 8,500 public companies traded in the late 1990s, and there's now about 4,500. So, there was obviously a lot of those public companies shouldn't have gone public, but the fact is that in the 90s, there was an incredible bull market and there was a lot of IPOs. So I think I was part of that in terms of just the overall growth of the equity capital markets business. And then, when I was asked to move to Hong Kong, I was there 01, 02, 03. There was huge growth in that market as well, and we expanded the market share across all of Asia. And then running the Americas in the US. So I suppose the comment relates to the fact that I worked in lots of different areas in different regions. And just the whole business from the 90s to today, the volume of deals has gone up, the size of deals has gone up, the market cap, obviously, of the market has gone up by a huge amount. But I think, of the 32 years I spent at Goldman Sachs, 28 were spent in equity capital markets. So I was there during that growth.
And what was it like going from, America to Hong Kong? What was sort of the key differences between clients and I suppose even just the work culture in the office and so forth? Yeah.
Yeah, look, I think that in Hong Kong, even in 2001 and 2002, I know it's a long time ago now, but at the time, it seemed very, very well regulated. But everything in Hong Kong and across Asia, every transaction you did was new. So it was, a Philippine company listing in Singapore, or a Taiwanese company that wants to do dual listing in Taiwan and the US. So everything was new. And because of that, you had to really be aware of what are the regulations, the listing standards, the customs, Hong Kong IPOs. People in Hong Kong tend to be superstitious, and 8 is a lucky number. So every IPO gets priced with an 8 somewhere in it. So it can be $18.88, or it can be, $20.08. But, so there's lots of different little nuances you learn. But I would say that what was interesting is, Goldman Sachs is an incredible organization with incredible culture. And one of the things that I did and we did across the world, but I saw it, up close when I was running the Asia Japan business, was that we were still Goldman Sachs, whether we were in Hong Kong or we were in Ohio or California or London. In other words, the quality of the standards, the compliance, the due diligence, the client selection, the business selection, We never chased business just to chase business. We always held up the standards of our firm across the globe. So while Hong Kong was a very different area and region, and it was a marvelous time, we really enjoyed it when we were there. It was very different to the US, which is much more of a cookie cutter. You kind of IPOs in the US have been the same, so there wasn't a lot of new stuff back then. Everything was new in Hong Kong.
No need to pick a lucky number in the open price. That's really interesting. And I suppose on that idea of the Goldman Sachs name and standard, you spent over 3 decades at Goldman Sachs. What made it so unique on reflection? And I suppose, yeah, why did you stay? I'm sure you had many different options throughout that, throughout those over 3 decades.
Yeah, look, Goldman, to me, that's easy. And obviously, you're right. I stayed there for 32 years, and I wouldn't if I didn't really like the people. I think Goldman has world-class people. It's a world-class organization. And I love my job there, and I really enjoyed working there. Every day was a challenge. The people challenged your way of thinking, and had held you to very high standards. Teamwork is real. We over communicate. People treat each other well. There's a healthy paranoia, maybe frankly unhealthy sometimes, because we're very competitive. And even though, after a year where we're number one in the league tables by a lot, at the year-end meeting, we'd find 17 new things that we needed to do better in the following year. So that paranoia, while it continues to make Goldman be great, it never allows you to rest in your laurels. So I stayed at Goldman because I think it's still the case. I think it's a world-class organization with world-class people, and they all push each other to get the best of each other. And in the process, as with any organization, I'm sure there's people who have sharp elbows, etc., but they tend to get machined down. And teamwork is a real thing at Goldman Sachs, and it's real. It happens every day.
You've led the pathway now, because there have been many fortunate graduates in recent years, especially, that have now gone to Goldman. So and actually, if I've asked this before, and it's a similar response. It's the teamwork, and it's also apparently a lot of people at Goldman Sachs have done sports or Olympians and so forth.
Yeah, I don't know whether we're any different to any other bank, but it sort of leads to a question that you touched on earlier on. In terms of looking for a job, I would often have people ask me, what's the secret to getting into Goldman Sachs? And I would always say there is no secret. Think about if you're hiring for Emanuele Incorporated tomorrow, who are you going to hire? You're going to hire somebody who, presumably by virtue of the fact that they get in the door, they're going to be smart enough. So smarts tend to not be an issue if they've gone to the appropriate, if they've got third level education, etc. But you're going to hire somebody who is energetic, who you like, who is fun, who's curious, who you want to see at 2 o'clock in the morning when you're both tired after 3 all-nighters and you don't want to kick him out of the conference room. It's a very human process who you hire, and I think that's why I say that there's no secret. But I think for whatever reason, Goldman has been able to attract and manage and keep human beings who espouse the culture. I suppose maybe that's it. That's it. If you don't agree with the culture, you get moved on, or you move yourself on.
And so then, looking back at the career, hundreds of IPOs, lots of different deals. From what you're able to talk about, what was a career? What was one of your favorite moments or favorite deals, and what one of the most challenging moments? And actually a follow-up, because I'd love to know, going back to a point you said there, having experienced the 1990s, and maybe for our listeners that want to wear that, the dot-com bubble and so forth. I wasn't even alive, but what would you, just knowing from the history, from reading the history, but did you ever expect there to be, or did kind of the people at the time during the 90s was there a lot of skepticism towards the Mag 7 now? And kind of to refine the question, I've kind of gone all around the place here. Was there ever this, expectation that there would be, the Mag 7, or kind of, what was your perspective on this big rise of, Bitcoin, these big tech companies and so forth?
Right, there's a lot in that. So
Yeah, yeah,
let's just parse through that. First of all, you know, when you weren't born in the 90s, when I referenced 1983, you must think that was close to Second World War or something like that. So like that's such ancient history to you. It's kind of hilarious. Anyway, um, you asked me about memorable or challenging deals, and then we get onto the markets in a second. So look, I think that the deals that stand out, rather than I'll name a few clients, but there were the ones that were a lot of firsts. So some of the deals would be Deutsche Telekom, the first German privatization that listed in the US, and the fact that Goldman was part of that was a really big deal. Maybe some of the well-known household names that you've heard about, like the IPO of Nabisco, which makes cookies and snacks over in the US, or the Gulfstream IPO, which made aircraft, or the Hertz IPO. When you said you were working on that, people knew what you were talking about. Some of the amazing CEOs who I work with who ran great companies, like Rich Kinder, who was CEO of Kinder Morgan. That was a $3 billion IPO. It was the largest IPO of the year we did it. So you remember that stuff. Or more recently, the IPO of Saudi Aramco, which I worked on, which is still the largest IPO ever done. And then there's tiny, and like the first follow-on offering I ever did as a deal captain, I remember vividly. I can remember the valuation multiples in the sales memo on that, because it was my first transaction where I was senior ECM person, and that was for a tiny shipping deal. There's some of the deals in Asia, like numerous deals with Morris Chang and TSMC, or the IPO privatization of PetroChina. So a lot of it tends to be first. In terms of the challenging deals, to me, those that didn't get to the finishing line were always challenging. Really painful when you didn't get a deal to the finish line, or you didn't price it, or you had to downsize it. An IPO is a huge milestone for companies and their employees, and it's incredibly rewarding when they go well, both to the company and to the management. But it's the opposite when they don't. And I felt and lived the emotional roller coaster of those deals. I love my job, as you picked up. I often describe pricing an IPO as 50% valuation and market logic, and 50% human psychology, in terms of how investors and portfolio managers will act and trade the stock in the near term, in the medium term, and in the long term. And we received our grade in terms of how we did on the aftermarket in the days and weeks after the deal. So very dynamic and enjoyable, but very stressful. And if the deals didn't go well or didn't price, I would take that really, really hard. So they were the most difficult times. Then you morphed into the dot-com bubble, and was a magnificent seven, something that people would say. 25 years is a very long time in market history, and I tend to like to look at long-term history and trends when looking at the market. We had the Nifty 50 in the 1970s, which I know feels like the Stone Age to you, but I wasn't trading the markets back then, but there was plenty of time where we had concentration in markets, and there even is today. There's some of the European markets have huge concentration in terms of the largest caps within their stock markets. And I think what's happening in the most recent weeks in the market is we're starting to see a little bit of the bloom falling off the rose a little bit, in terms of the Magnificent Seven are coming back down to earth, and the other 493 stocks in the S&P 500 are trading at more attractive valuations, are beginning to look interesting. In fact, I saw that somebody was calling them the Maleficent Seven rather than the Magnificent Seven. So look, I think that markets, to me, it'd be an interesting debate, and probably a separate topic, to talk about markets and talk about long-term trends in markets. Markets, and I always say this in tough times, and I've been through plenty of tough times in terms of the global financial crisis and the dot-com bursting and all that. When markets are having a tough time, and even when they're having a good time, but when they're having a tough time in particular, you really have to go back up to 30,000 feet and say what do markets trade on? What do stocks trade on? They trade, is the economy growing or not? Where are interest rates? Is the Fed on an easing or tightening cycle? How are earnings? How are corporate earnings? The state of corporate balance sheets, are they strong? Are they weak? Are they delevering? Are they levering up? Um, there's so much that goes into has a valuation of the market. Where's the trading versus long-term trend? And how's it trading versus where interest rates, inflation, and earnings are going to be in the following year. When you go back up and you look at that, you can get really tied and distracted by day-to-day trading and by press headlines and all of that sort of stuff. Um, but you kind of have to go back to first principles of what drives markets. And markets tend to be pretty efficient in terms of reflecting what's going on. Uh, but sometimes day-to-day volatility can overtake that. And that's why I think Warren Buffett has been so successful for so many years. He kind of doesn't trade on day-to-day volatility and tends to take a long-term view. And I can't remember everything in your question, but I think I hit most of what you said.
Apologies. No, that was that's really what I want. That's really what I wanted to get was, your longer term perspective, because obviously in the fund, people that are managing it for the year, the investment committee and so forth, they don't have that longer perspective. So that kind of criteria you've just listed there, I think is it answers what I was trying to express.
Yeah, well,
But
just
I
one more
did do a
point on
good
that.
job. Yeah.
Look at the equity market over 100 years has been an incredible outperformer versus inflation. It's been through thick and thin, through world wars, through lots of things. You just have to be a long-term holder. And I think that that's an important thing to think about. To be invested has been generally a smart thing to be. And obviously, downdrafts will obviously hurt the portfolio, but if you have a long-term orientation, unless you believe capitalism is going to stop, generally the markets have been a good place to be.
Stay invested.
Generally, yeah. It's really hard to time the market too. If you sell today because you want to go into cash, that's fair enough. But if you sell 100% and you're in cash, are you smart enough? Can you predict exactly the right time to get back in? There's some stat out there that says if you weren't invested in the market on its 10 best days, your performance goes down by 80%. So are you good? Is somebody smart enough to pick those 10 days? I can't imagine they are.
Well, we're definitely not going to do that at the SMF. So I don't
Oh,
know.
interesting.
Yeah, yeah. I suppose as well, not to go too off script, but on all these deals, I'm sure you met with the CEOs. You mentioned Morris Chang there. That's one of my heroes. Was there any favorite CEO you met or leader of a company?
Well, I mentioned two of them, Rich Kinder and Morris Chang. What I loved about Rich was that he would tell the investors exactly what he was going to do every year. And if he didn't do it, generally he did and outperformed. If he didn't do it, he would say, okay, I did 5 out of the 6 things I was going to do. I didn't do the sixth, and here's the reason why I didn't do it. Transparency is a great thing. Investors love that. And they can trade based upon their own book, etc. But you build up huge credibility when you do that. And I would always give that advice to public CEOs, which is just tell the market what you're going to do and own up to it if it didn't work. And then you'll get that credibility and that'll inure to your benefit when things aren't going that well. Morris, probably one of the smartest human beings I've ever met. And by the way, talking about a great listener, that man is a great listener. But there's hundreds, literally hundreds of CEOs that I've met that have impressed the hell out of me.
What they've done at TSMC is incredible.
Incredible. Oh, incredible story.
And yeah, he just did a podcast as well on the acquired because he doesn't do many, or as far as I'm aware from my research, he's not done many public, speeches and so forth. And
No,
he was.
he
Oh, sorry.
doesn't. He doesn't. And we bonded. When I first met him, I remember he was talking about bridge. He's a big bridge player, and my mom represented Ireland for bridge in the senior levels, so I think that I immediately jumped in credibility when I told them that. So that helped me out in a big way.
And I suppose the engineering background as well.
Yeah, no, I think, yeah, actually, the engineering background I think helped a lot in a lot of situations for me in banking. I think that you get some credibility when you walk into a manufacturer or to anything that's got to do with engineering, and you say that you're actually an engineer. I think that that does help. You're not just a banker moving paper around as people want to be negative about bankers. I could say that.
And then I suppose reflecting again, how we've kind of alluded to it, but kind of a bit broader, how has, the role of the ECM in a bank and generally, how's it evolved? How's this change been since?
Well, look,
Yeah.
ECM, as I mentioned in the 1990s, when all those IPOs were happening, there was one book runner, and that was the person who managed the deal. And as we got late in the 90s and into the 2000s, we started seeing things come in that kind of hurt the margins, like joint book runners. So you had two banks working in the same role. You had bought deals, risk trades that were taken off the bank's balance sheets, which affected the margins. And probably the biggest change that I saw was in the 90s, you'd pitch the deal and then you'd price the deal, then you'd allocate the deal to the investors. So that's the syndicate role, allocating the deal to the investors. That gets split away. So the execution of the deal was more syndicate versus the origination of the deal. But I would say that the changes in ECM are probably for a deep dive in ECM podcast, not for this podcast, because I could get into chapter and verse and that stuff, and it might get pretty boring.
And then looking back at your career at Goldman, what's one achievement you're most proud of, or a career highlight?
I might break that answer into achievement most proud of, and then highlight, which I think is going to be a bit more personal. But on the career, on a macro career level, I'm proud to have become a partner of Goldman. It's a world-class organization, as we talked about, with great people, and it's not easy to make partner, and it's not easy to stay a partner for the 16 years that I did. And on a micro level within that, I'm proud of the teams that I led and the market shares we gained and grew. And then in Hong Kong, very proud of the 3 years that I was there. We had no execution, no reputational problems, 100% successful deals, and #1 market share in record revenues. But highlight to me, I would say, when you look back on 32 years at Goldman and the stresses that can lead to in life, I would say most importantly to me is sort of the intersection of my career and private life. As mentioned, I'm proud of the fact I worked at high levels at Goldman for such a long time, but I'm also still the same person, more or less. I mentioned earlier my basketball teammate friends from the 80s. The four of us still have a very active daily WhatsApp chat with whatever is on our mind on that day, and we see each other often, even though we live in the US, Dublin, and Turkey. But they will say, if they were on this podcast, that I'm still the same. Fill in your favorite expletive term that I always was, and I'm proud of that. But the thing I'm probably most proud of is that Nora and I were married in '89, a few months before I started at Goldman, and 36 years later, and notwithstanding the stress of a Goldman career, we're still happily married, enjoying our lives together. And I'm really proud of the fact that we have 4 independent, healthy, successful children beginning to live their own adult lives. So, when you think about the career can obviously affect personal life, and I'm very proud that it's all worked out okay.
Well, that could be a whole other podcast in terms of relationship advice, and I'm sure many people would love to know that. But I suppose sticking on this, just one more question. Whilst we're on it, what was the moment like? How do you find out that you're a partner at Goldman Sachs? Is it a phone call? What is how does
Oh
it
yeah,
feel?
that's interesting. So it's a whole process, a really well done process, and you're not really supposed to know about it, talk about it, or ask about it if you know you're kind of potentially up for partner. But by virtue of how long you're in your career and what you're doing and what your day-to-day job is, you sort of know they must be talking about you. And So the way it works is there is a day where the CEO calls all the new partners in the morning. So you always make sure you're at your desk first thing that morning to get any phone call. Um, but there's plenty of stories of people who've been called the night before to say, you know what, you were really, really close, but the line was just drawn above your name and you're not going to make it this year. And that's obviously a devastating phone call. And so for the 48 hours before the morning, you're desperately hoping the phone doesn't ring with anybody important. You do not want to hear anybody phoning you the night before to get that bad news. And if you haven't got that phone call, then you're never sure because they might not have even been talking about you, but you hope that they were. And you're sitting at your desk. And I remember I was called by John Payne, who was the COO at the time that morning, and it was actually a very short call. He just says, John, you've had a great career, and we're very happy, and to invite you into the partnership. So I said, thank you very much, John. John, I'm delighted. And he said, now get back to work. So it was short and sweet, and it was a great day.
So that's the secret to go on success. Don't celebrate too long or get complacent. Get right.
Yeah, very much so. Very much so.
And then I suppose,
Sorry, go
yeah.
ahead.
Sorry. No, no, no.
Well, I was going to say that it's when you become a partner, it's not like you can sit back in your laurels. Every year is a new year, and every year you have to do better than the last year. It's a real dynamic thing, and I think that's a really good thing. You have to continue to work hard, if not harder.
But then I suppose moving on, having served on the firm-wide commitments committee, how did you approach high stakes decision making?
Yeah, so the commitments committee at Goldman is a committee that determines the clients we work for, the business selection, and any underwriting risk that we have. So it's a very important committee, and it's populated by global leaders who run different industries, and then the markets leaders as well as legal, reputational, compliance people, etc. It was a really incredible group of people sat globally, and it held us and our teams and our clients to very high standards. So we turned away a lot of business um, because they didn't match the criteria that we set. That frankly other banks ended up doing. In terms of the approach to decision making, you have to ask the right questions, trust your instinct. If there's anything nagging you, make sure you continue to ask the right question because likely if something's nagging you, it's nagging somebody else, and your question will uncover some other issue. And if it doesn't feel right, just don't do it. If it doesn't feel right, keep pushing until it feels right because it's never worth it. For that incremental piece of business, it's never worth the reputational damage, as has been proven time and time again at banks all over the street. It's never worth taking on marginal business at all.
And then shifting our focus now, more to the present. Could you tell our listeners about what it was like co-founding 25 Madison and perhaps what you do?
Yeah, so after 30 years plus at investment banking, as each year went by, I realized that some of the stuff I was involved in that side of Goldman was new and interesting, and I slowly began to realize that maybe 32 years is a good enough inning, and maybe it's a good idea to think about doing other things. And that's where 25 Madison and some other things came into focus. 25 Madison is brainchild of Stephen Price, who's the CEO and the co-founder, and he and a couple of other of us said that it would be very interesting to try and found an incubation and investing firm that could be excellent in the early stage universe. And it's been great. We founded it in 2018, and we now have a firm with 4 industry verticals that incubate and invest in early stage companies. And the verticals are AI, healthcare, in industrials, and supply chain. And across those verticals, we probably have about 40 portfolio companies, and it's been a very interesting ride.
And how does the venture capital approach 25 Madison differ from traditional investing? And I suppose how would you kind of describe your investment approach and criteria?
Yeah, so we have 25 Madison is key differentiated. Two key differentiators. Number one, we both co-found companies i.e. we start companies with co-founders, and we invest in companies founded by others, which a traditional VC would do. And that gives us another tool in our toolkit for pursuing an opportunity, depending on where we see the greatest chance to make money for our investors. The second thing is we've invested heavily in building connectivity into the private equity ecosystem. And what that does is that builds a stable of customers and design partners for our startups that we back, which gives our portfolio companies a real edge in terms of customer acquisition, which is vital. The first, second, and third customers are vital to our founders and startups. And as AI makes it easy to build solutions, the resulting noise that you get around that is harder to get and keep customers' attention. So, these relationships across private equity, which obviously have their own set of portfolio companies, are huge differentiators for, our startups selling into enterprise customers.
And within those four verticals, is there a type of company or even type of founder which excites you the most?
Yeah, so we back healthcare and business technology companies, and in most cases, they're companies that that are trying to gain leverage from private equity owned customer system that we've built. So within software, we love the application layer, especially software solutions for overlooked markets like blue collar markets or physical world businesses, rather than just being a co-pilot with other software engineers. Within healthcare, we partner with founders building healthcare IT and tech-enabled care delivery business, and which improve outcomes and reduce the overall cost of care for patients. So the founders we love are really founders who have skin in the game, who care a lot, who are passionate, who are solving problems that they themselves have dealt with. For example, they've experienced inefficiency in their business and they're building a business to solve it, or they suffered their own personal health experience that convinced them that there's a better way to care for patients. But I use the word passion. I mean, to me, that the founders that we care the most about are the ones who have a vision and who have a passion and live and breathe what they're doing.
And out of those two, I suppose, SaaS or healthcare IT. I mean, are there any exciting trends that you've seen or you think are going to be quite important for the next
Yeah, I
five,
mean,
long
beyond
term?
the industry vertical, I think one of the trends we're seeing is that really large companies will be able to be built with small teams. AI gives huge powers to every information worker, and the same size teams and therefore venture dollars won't be required to build large companies. We have a prediction that very, very large, like massive venture funds, are going to have a hard time finding enough quality assets to deploy their dollars, because the demand for capital to fund huge teams will shrink. We also see a conversion in terms of macro trends of venture and private equity. With some venture funds beginning to fund tech-enabled roll-ups of legacy companies, which is obviously something that private equity have in spades. And those roll-ups, which historically would have been a major target for private equity, venture funds could probably do it in a tech-enabled way. So that's going to blur the lines a little bit.
Okay, I'm conscious of the time because you've been very generous here, John. I suppose moving on to leadership advice and career advice for students. Firstly, can I ask you, because this is a big topic of debate, you obviously did an MBA at Wharton. What would your advice be on pursuing an MBA today?
Yeah, look, an MBA, clearly one of the best decisions I ever made. So it was good for me. And it was helpful for me because it helped me go from one industry to a different industry. But it also helped me. I made some of my best friends in the world there. And as I said, it helped me get a start at finance at Goldman and open up other opportunities if Goldman hadn't worked out that otherwise I wouldn't have had. So I think an MBA is helpful in terms of resetting a career. So to somebody who's thinking about it, I would say take stock in your career. Do you like it? Are you passionate? Do you care about something else? Are you happy? Are you unhappy? And if you're not sure, then that's okay because very few people are sure about anything. but an MBA can help solve some of those issues, and it can help open doors. I also know some very successful people who didn't do an MBA. They knew that they were growing and learning and progressing in their career, and they stayed doing it, and they've had incredibly successful careers without an MBA. So it's not a kind of cookie cutter answer, but to me, you sort of know it when you're in it. And taking stocks is always a smart thing to do.
But I suppose key takeaway is great contacts, and also it's good for a career pivot if you wish to do that.
Yeah, yeah.
And then I suppose, what would your greatest lessons, and specifically leadership lessons, be from Goldman Sachs from your 32 years ago?
Yeah, I think I've said a few of them before, but I think listen, be a good listener. In terms of leadership of teams and groups, I would say be transparent and open. Talk normally. Don't hide the ball. I always joke that I'm never smart enough to lie, so I always tell the truth. But it's true. Like, if you tell the truth, you don't have to remember what you didn't say or what you did say. And I think that sort of honesty and transparency and normalness comes across, and people trust you because of that. So treat people at all levels with respect. I think that you can learn a lot by how people treat security guards and all that when they walk in. So you have a lot. Everyone has a lot to contribute. So I think over communication, both good and bad news, is really important. One of the things that I would always be impressed with, and I always tried to do, is I did not shy away. In fact, I ran a little bit towards problems. A lot of people say I don't want to be associated with a problem because it could rub off on me, and I always gave a huge amount of credit for people who tried and failed, rather than those who who didn't try or ran away from problems. So sometimes the kind of ugly situation can be something that can really help improve your reputation. And then show good example, by working hard, by taking your vacation, by showing the team that you're spending time with the family. These are all leadership lessons that I think are worthwhile, but they're probably not for people graduating right now. I think, just to go on to that, for people graduating right now, just to anticipate a question that you were probably going to ask me, but if you weren't, you should definitely. To me, one of the biggest mistakes that young people do is they don't build a network when they first start work in the first 5-10 years of work. They just do the deal, keep their head down, focus internally, do the next deal, and they think they'll be promoted and recognized, and they probably will be, but they're not building the network. The people that you're in college with right now, who are getting drunk at the pavilion, are going to be running large companies, in 30 years' time. Crazy to think, but it's true. So building a network, both now and later and around people you work with, is huge. Build, cultivate, and grow that network, and that's an important thing to do at every stage in life, but even as a junior person. And also building it at a senior level. Try to have a normal relationship with senior people. Senior people are people too. They like to laugh. So don't respect them so much that you're afraid of them, and they don't. And you seem aloof to them rather than the other way around.
Well, there's a lot of advice and lessons in this, John, but I think going to the Pav on a sunny Friday like it is here in Dublin now is going to be quite a nice thing to do to build the network. But I suppose as well, touching on your career, but also now with VC, what advice would you give to someone looking to build a career, in venture investing or capital markets?
I think to expand it in terms of advice, we've touched on this, but when you're at work, as I said before, work hard, be friendly, be outgoing, smile, let people see your personality. People like being around happy people, so be optimistic. Be a team player. Don't be afraid to be irreverent and use humor. As I said, everyone likes to smile and laugh. So I think that showing real personality rather than being a bit, atomic at work, is important. I've said it before, I'll say it again, just the listening skill. Somebody said to me early in my career that you never learn anything when you're talking. And that is a truism. You literally cannot learn anything when you're talking. And I think it's an important fact to remember. Just expanding on advice, the other thing I'd say is, look after yourself. Work out, mind your health. Go out with your friends, remember their birthdays. I really think that that's important. And sometimes young people, because they're so fit and healthy and they don't have to work out, lose sight of that. And I think it's important to do that. I guess the other thing I'd say is develop resilience and persistence. Not everything is going to work out perfectly for you or your career, and how you react when adverse things happen will be really important. People will see how you react, and they'll note how you react to bad news or to things that don't work out well. Do you react with resilience, thoughtfulness, calmness, or do you throw your toys out of the crib? I think that do you react with class, integrity? So I think that all of that sort of stuff is important.
I suppose then moving on, a very quick two-part question. If you were starting out today, would you still pursue a career in finance? And a kind of follow-up to that is, this was asked to Henry Kravis, if you could be born anywhere in the world, where would it be? He chose Japan. What would John Daly's answer be?
Would I? Yes, I would. I find I really enjoyed finance, and I enjoy it to this day. And I wake up every day and read a journal. I like finance. I think it's really interesting. So yes, I would advise people that it's a great career path. Where in the world would I wish I had been born? It's in today's modern time, right?
Yes.
Ireland, Dublin.
That's the correct answer from the demographic of our listeners, plus
Well,
80% Irish.
It's really true, and the reason it's true is that and Dublin is different now than it was when I was going to Trinity. But what Irish people have is they have first of all, they have a lovely sense about them in terms of how welcoming and friendly and outgoing they are. But secondly, that outgoing, because we're a tiny island and we're basically, floating, bobbling along in the global economy, we have to be outward looking. So while we all are Irish, we are constantly looking and learning and watching the outside world. And that's why the diaspora of Irish people are so proud of being Irish. I think it's because it gives great culture, and it gives a great sense of belonging, but it also gives a great sense of curiosity about what's going on in the rest of the world. And you gave me a few seconds to think about it. I traveled the world in my brain, and I ended up in Dublin. So, genuine answer.
Well, the success of the Irish definitely is a testament to this. And I suppose as a final on the spot question, another one is, if you had to give one book recommendation, what would that be?
I don't have one book, so I'm sorry to disappoint. I loved to read. I love to read, and I have lots of books that I recommend. When I was an engineer at GE, I read lots of books about managing change and being an entrepreneur within a big organization. Jack Welch was the CEO when I was at GE, and he was a superstar. And so he wrote some books about that, which I loved. But I've always thought that we can learn a lot from historical figures. So I read a lot of biographies. So if I was to recommend books to your listeners, once again with my biographic focus, I would say run out and buy the Last Line trilogy by William Manchester about Winston Churchill, or Edmund Morris's books on Teddy Roosevelt. Ron Chernow has done some great books on John D. Rockefeller called Titan. His book on Grant, the book on House of Morgan, the Warburgs. I think he's done some great work. Walter Isaacson more recently has done, the Musk biography is great, and the biographies he wrote on Leonardo da Vinci and Einstein are great. I'm a big Irish history guy, so Tin Pat Coogan and Michael Collins is a great book, and lots of other stuff around the War of Independence is very interesting. David Nassau wrote a book on Andrew Carnegie, which is really interesting as well, and his mansion still stands a couple of blocks north of where my apartment is in the Upper East Side. So look, all these books were great reads. And some of them read like novels. Like some of these lives, you can't put them down. It's just remarkable. And then as I got older and reaching this stage of life, I read recently a book which really will have no interest to people your age, but it may have interest to people my age, or maybe a couple of professors who, if they listen to this, which is a book called Travels with Epicurus by Daniel Klein, which talks about savoring this time of life. I joke that 60 may be the new 40, but 80 is still 80. This book talks about enjoying this phase of life. So anyway, as I say, probably not relevant to you and your current students, but maybe to some other people listening.
Well, I really appreciate that. That's sort of a more than a summer reading list. So there's a lot of really interesting recommendations there. I suppose, wrapping up, I just want to say a really big thank you. This has been one of the longest, I'd say most candid, discussions. So I really appreciate you taking the time, Mr. Daly.
Great.
John, thank you.
I've enjoyed it. Thanks a lot, Emanuele.
Thank you so much. You have been listening to the Trinity SMF podcast. You can find more of this podcast on our website, www.trinitysmf.com. And follow us on our social media to find out more about the podcast releases, upcoming events, and much more. Thank you again for listening, and stay tuned.